Second learning objective in Chapter 4 is to use the worksheet to prepare financial statements. So, preparing financial statements from a worksheet. Both the worksheet and the financial statements have the same account balances and the same net income or loss. As we stated earlier, the worksheet is an internal document just for the accountants or the company's use. Financial statements are prepared for the external users, as we talked about back in Chapter 1. The adjusting entries from the worksheet need to be journalized and posted. Okay? So, once we've extended our balances from the adjusted trial balance to the income statement, we can prepare our income statement, our formal financial statement of income. So what do? We always start with the who, the what, and the when. The who is the company, the what is the statement, the when is the period. For income statements, it reflects a period of time, the month of May. During that time, we had $6,500 in revenue. We had expenses of $1,000 for salary, $1,000 for depreciation, $500 for supplies, and utilities of $400. You'll notice that they are descending. Expenses are always listed in a descending manner. We total up the expenses, we subtract them from the service revenue, we have net income of $3,600. Right? There it is on the worksheet, here it is on the formal statement. You'll notice that dollar signs go at the top and at the bottom, the last line double underlined. The statement of owner's equity starts with our who, what, when. Okay. Who is the company? What is the statement made? When? The statement of owner's equity also, like the income statement, reflects a period of time. We have Josie Smith's beginning capital. We add $3,600 of net income. Subtotal less the withdrawals gives us Josie Smith's ending capital balance at May the 31st of 2010. From the last two columns of the worksheet, we have the balance sheet accounts. In the balance sheet accounts, we list after our who, what, when, company, balance sheet, the date, May 31st of 2010. After that, we list our assets, our liabilities, and our owner's equity, the three components of our accounting equation. Okay? You'll notice one thing here. You'll notice that the date, May the 31st, doesn't reflect the month. It reflects the balances at a particular period of time. Okay? The income statement and statement of owner's equity reflected the month's activities, but this balance sheet is the account balances at a particular date in time. So we list out our assets, starting with cash, followed by accounts receivable and supplies, followed by furniture, less any related accumulated depreciation. Total them up, $23,500. Dollar sign at the top, dollar sign at the bottom, double underlined. Next we have our liabilities. Okay? Liabilities are usually listed the most by which items will get paid first. Okay? So accounts payable is normally first, followed by the salaries. We've got $400 of that unearned revenue. Total up the liabilities of $7,700. Owner's equity is our third category of our accounting equation. Josie Smith, we got the $15,800 from where? The statement of owner's equity. We'll add that to the liabilities to come up with $23,500. Again, well, they didn't do it here. I don't know why not, but we should have a dollar sign here at the $7,200 and down here at $23,500, And again, the double underline. What does the double underline mean, Mr. Cunningham? What it means is that you are in balance with your assets. That's what the double underline means.